what has been the major theme for you that if you could take away in one sentence, what would you call 2016?
I would say negative yields in the first part of the year, and then of course the Trump effect on yields. That's been the biggest move, I think, for bond markets.
Does that carry on into early and longer period in 2017?
We think so, indeed, because of course, you know, you look at the markets and they found their direction. So for us, the way for yields is to go up. In 2017, yeah.
Because of what? Because you believe actually that Mr. Trump will be as good of his word and deliver a big fiscal boost, and actually the Fed will manage to get 3 rate hikes away in 2017?
I think it's not so much about what we believe, but it's more about what the market's believing. And at the moment, it's believing the Trump story very much. So, and also it's looking at Yellen. And what you see, Yellen yesterday, very strong words again on the job market. It's all confirmation that things are going in the right direction. We see further fiscal stimulus, but we see this economy moving up and rates driving higher.
It's tunnel vision though. Investors are just focusing on one theme at this point going to year, and that's reflation. What about all the other stories relative to the US? And if I can cite the dollar yen rate, you've seen almost a one-way path for dollar yen on its ascent. What happens next year if you don't get as dovish a BOJ, if you get more strength coming through the Japanese economy? Is there a breakout? Is there something that's going to move the needle in this direction that you've seen in dollar yen for the past couple of months?
Yeah, it's often like that with markets because we've seen it with the negative yields as well. They were driving yields, you know, below zero, almost very much on a one-way story. And it's very much, it feels like that at the moment as well. But you're right, in 2017 we have a very heavy, election calendar in Europe, and that may put some breakers on those yields going forward.
So what's exciting hunting for you in 2017? What are you looking for to try and park a bit of money in that could be a somewhat contrarian call to the rest of the market that's focusing on Trumponomics?
Well, we're going into the year being overweight in equities, so that's where we're putting our money. We're underweight in bonds, and within bonds, we're looking very much at investment grade bonds and a little bit of high yield.
It's really interesting. I was having a conversation with Jeff yesterday about what type of bonds you want to be holding, because some people in the market are saying you don't want to be touching high yield at this point. If interest rates are going up in the States, you don't want to be in that sort of the market. Others are saying don't take duration risk at this point, take a little bit of credit risk, because if you look at the way spreads are priced, they're mispriced. There's so many different calls on the bond market right now. So just flesh out what your view is on the bond market.
We put the center of gravity in our portfolio with the European investment grade. That's where it has been and that's where it will stay, because the European Central Bank is still extending, if anything, its corporate purchase program. We're also putting a little bit of that into high yield, because I think that the America First agenda of Trump is very good for high yield, but we've said goodbye, for instance, to emerging market debt, because at the current spread levels, you know, a rising dollar and rising yields, things are just becoming a little bit too hairy for EMD.
No, what could be the